Hi there, it's Chris Hamilton here with bookkeepingautomation.com and also entermyinvoice.com. And today we're on to the 18th tip of bookkeeping marketing tips, also accountant marketing tips. And tip number 18 is using our value pricing tool to create a differentiation and market yourself. So first of all, if I were to view into the future, value pricing is where the bookkeeping and potentially the accounting world is going. So value pricing, basically charging one price per month based on the value that you provide for an individual, is really where it's going. This charging clients on an hourly rate is going to change in the future and really won't be acceptable by a lot of clients, just based on the unpredictability of the revenue or the money that they have to shell out for it. So literally, what you have to do is you have to start thinking about, how am I going to get into doing value pricing? And we have a value pricing tool in our software, Bookkeeping Automation, that will help you on your path to creating a value pricing package for your clients. So first thing you need to do is, as it stands right now in December 2016, the only systems we attach to right now are QuickBooks Online or QuickBooks Desktop. So if you want to figure out how to do this, you have to attach your QuickBooks instance, whether it's online or desktop, to Bookkeeping Automation. So you connect the account into our platform. Then what you do is you use our value pricing tool and you pick a time frame. So typically you should look at over a year or 2 years, 3 years, if you can get that kind of information out of QuickBooks. Then you start to look at the accounts payable amounts or the accounts payable transactions that are happening. You also look at the accounts receivable transactions that are happening, and then also look at your bank and credit card statements on those kind of transactions that happen as well. Then what you do is, over that period of time, look at an average that you would do over a monthly basis. So if you went over 12 months, then basically take that sum of the accounts payable transactions, the accounts receivable transactions, and the bank and credit card statement transactions, add them up, and then average that out over a period of time, so on a monthly basis, so you can figure out what that would be. Then what you need to do is you say, okay, what is the effort that I take right now to do this on average? It might take me 5 minutes per transaction, it might take me 10 minutes, whatever it is. You need to come up with a determination on that effort. Understanding that also, once you start to put in automation, if you're using QuickBooks Online or if you're using our platform, Bookkeeping Automation with QuickBooks Desktop, you're going to start seeing a time savings. So once you do this, you say, okay, here's where I am today. Potentially, I could be here with a 25-30% reduction in my time. And then what you could do is start pricing this accordingly. So if you have 120 transactions over a year, you know that you're going to do 20 or that you're going to do 10 a month. And then, take the amount that you would normally do it for, say you could discount it by 20-30%, and say, here's what my new number is going to be. So just to give you an idea how this looks in our system, when you attach, you're going to get a screenshot of the accounts payable. You're also going to get a look at the bank and credit card transactions that happen. You get to see the amount of accounts that are in this, and those are off to the right-hand side. We also have accounts receivable. I just didn't put it on here because it didn't fit in this slide. And that's when you start to add up all these transactions. Now, here's something you need to take a look at. So before, you would be doing stuff on an hourly pricing model. There would be no automation in there, so you're not getting any kind of time savings. Really, what you're doing is you're in a marketplace where everybody's doing the exact same thing. So you have very little differentiation against this. So let's say, for example, you're charging a client $1,200 a month at $30 an hour. This means that you're spending 40 hours per month, or roughly 10 hours a week, working on this client. Let's say that based on your hourly rate and the profit and the spread between what you're charging and what you're costing, you got a 30% profit. This means on that contract, you're getting $360 of profit each month. So start to deploy something, say by using QuickBooks Online, by using some of the automation through our platform and other platforms. What you could do is, once you come up with that whole idea behind value pricing, or the one set fee that you're going to do per month, that's where you're going to start charging your client. Now, when you start putting these automated steps in, understand you are going to have time savings that are associated with it. For example, on QuickBooks Online, you can pull in bank statements by hooking up your client's banks to their QuickBooks Online instance. You start putting our feed in and any of their paper receipts or PDF receipts, same sort of thing. We can extract that data and make it different. Now what you're doing is, first of all, you're having the ability to set one set fee per month, so it's manageable and budgetable. You're reducing the time that you spend on this, and you're going to be in a position where you can beat your competition in a couple of different ways. So let me take a look at this. Let's just say, for example, you were able to reduce your time by a lot more, and now you're going to charge your clients $1,000 per month doing this sort of stuff. Now, let's say with the automation, you've reduced the manual entry 50%. So now you're down to 20 hours instead of 40 hours. Now, if you take that amount, even though you're charging less, you're working half the time, your new hourly rate's about $50 per hour, which is a 66% increase in the in what your hourly rate would have been before. The other thing too, though, is if you look at the profit side of things, now let's just say you're getting profits of $500, you have a 39% profit increase as it relates to leveraging a value pricing model for your clients. So some of the benefits here, obviously, by leveraging a platform like ours, by using, say, QuickBooks Online with the bank feeds coming in, you're reducing your data entry time upwards of 80%. The other thing, too, is by leveraging our value pricing tool, you know exactly what you're getting into based on a past history of what a client has done. And you can lay that out for them saying, you know, I'm going to charge you this much a month for this many transactions on a monthly basis or aggregated over a year. So you know what you're getting into. The other thing, too, is now you're going to reduce your costs, right? So what happens is when you're automating a lot of things, you don't have to do as much work on it. You're reducing your costs. You have more profit to play with. So you can either keep your price the same that you would charge, or you can reduce it as well. Now, the other thing too is, once again, you could do a lower monthly fee, but because you have more profit, you're probably going to be more profitable working less and charging a lower fee. The other thing too you need to think about is your clients like the predictable rate that you can put in front of them, and that's budgetable as opposed to the ups and downs of charging an hourly rate. The other thing that we do, we tie into QuickBooks Desktop and QuickBooks Online, so you can leverage this platform. One of the things that's great is, I know of no other platforms that will expedite that accounts payable process that do tie into QuickBooks Desktop right now. You know what? The other thing too is Intuit is a wealth of information. So one of the things that I would look at is if you go to quickbooks.intuit.com/accountants/resources/value pricing, then what happens is there is a wonderful module of about anywhere from kind of 5 to 6 hours on value pricing that if you go through, by the end of it, you're going to get a really good understanding of how to leverage value pricing. And once again, if you want to come back, you can leverage our value pricing tool that's built into our platform. It's free of charge, and that will help you out. So anyways, if you want a 30-day free trial of bookkeeping automation, then go to bookkeepingautomation.com. There's a little button on there that says free trial. Click on that. If you're a bookkeeper or an accountant, click on bookkeeper or the accountant option, and then that'll set you up with a 30-day free trial, and you can get going on this and see how it can work and help expedite your processes and move you towards that value pricing model. If you have any questions, feel free to reach out to me. Chris.hamilton@entermyinvoice.com or Chris.hamilton@bookkeepingautomation.com, and I'll be more than happy to answer them for you.